Funky, good to see how you doing. First one in today. Comatose, good to see you as well. How you doing? Free and February, good evening, Miles of CMF. Good to see you as well. How you doing? Evening, Miles. How's things? Are you shopping? Let's get artistic. Good to see you as well. How you doing? It is the perfect time for shopping. I'll be very honest. Hello, brother Miles. The dump continues. Yes, it does. Okay, let me pin the live before we stop the live show. In other words. Okay, here it is. Pin to your profile. Pin. There we go. Evening, Miles. Paul, good to see you on. How you doing? What's up, Miles? What's up, CMF? Kerry, good to see you on. How you doing? Hi, Miles. Nice to see you. Good to see you as well. XRP Den, how you doing? Hi, Miles. It's CMF. Stormy, good to see you on. How you doing? Okay, let's do intro, disclaimer, what we're going to talk about on tonight's live. And by that time, everyone should be tuned in for the first part. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. Long time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And also, this is episode 435 of the CMF Live Show. And thank you so much to everybody who has straight away liked and retweeted this live show. If you're watching this on X and if you're watching this on YouTube, thank you so much to everyone also who has liked the live show as well. Now, on tonight's live, we're going to be discussing the market space in terms of what's going to be happening next, how far can we possibly dump. We're also going to be talking about the Clarity Act, is also on tonight's live show as well. And apparently, Trump has some massive speech coming up in 6 hours or 5 hours as well. We don't know what he's really going to be saying. That can also have some sort of an impact on the market space as well. Now, before we go through the news on tonight's live, we're going to go through the comment section first, and then essentially we're going to go through the first news on tonight's live. So let's see where everybody stands inside the comment section. Fear greed index at 12. Extreme fear. This is the time to fill up your bags. I agree. Good evening, T. I agree with you. Good evening, Miles and CMF. Ottoman, good to see you. How you doing? Evening, Manny. Good evening, Miles and CMF. Manny, good to see you. How you doing? Miles should have told us this was going to happen. We could have sold and buy back in. Funky, this is something that essentially, happened due to many factors. One of the factors was the Epstein situation, which caused a rapid fire of Bitcoin dropping. 2 was all the war scenarios happening, especially in the Middle East. 3, over-leveraged positions also were one of the main factors as well. There's a lot of things that played into this happening. It's quite orchestrated that is happening right now. It's something too difficult to predict, see coming. There's only one man that essentially saw this coming about 2 years ago. So before the 2008 crash, 3 years before the 2008 crash, which caused one of the biggest collapses inside the market space, Warren Buffett essentially decided to put 60 to 70% of his assets into cash 3 years before the 2008 crash. He did exactly the same thing 2 years prior to this crash we're experiencing right now inside the market space. He kept 60% of his assets in cash. You can pretty much say he's the only man essentially saw this major crash coming 2 years before it essentially happened, up to date now. It's a difficult one to see coming, but manipulation is always there inside the market space. So that's something we can consider all the time. Hi, Miles. Good to see you're all in CMF family. Let's go for Facts News. Let's go, Carl. How you doing? But there's nothing to worry about because we know what's going to be happening next anyways. It's going to be, according to CoinDesk, which we're essentially going to be discussing on tonight's live, it's going to be a violent uprise, according to CoinDesk, after this essentially downtrend that we're experiencing right now. Callie, good to see you as well. How you doing? I'm doing great. Callie, good to see you. How you doing? Hi, Miles of CMF. Mickey, good to see you as well. How you doing? What's up, Miles and CMF Bloodbath out here? Hold on tight. Let's go. Let's go, Ray. I'm actually down 50% on my portfolio. That is nothing compared to what a lot of people are experiencing or what I'm experiencing essentially right now. Clarity Act will be signed by 3rd of April, is what Funky is saying. Good night, Miles. Ian, Ian, good to see you. How you doing? Okay, so first news on tonight's live. Let's just talk about the death spiral situation that's going on still. Institutional giants are under pressure right now. You're not the only ones experiencing this massive, essentially, downtrend that everybody's seeing right now. Institutions are feeling the burn the most, you could pretty much say. One of the biggest is MicroStrategy. But here is what's happening on the institutional sector of the losses so far. So, institutional giants under pressure. The $14.5 billion crypto stress test, essentially, is what they're calling it right now. The cryptocurrency market is currently navigating a period of intense turbulence, as evidenced by the massive unrealized losses for some of the industry's most prominent institutional backers. MicroStrategy, the essentially software firm turned Bitcoin treasury pioneer, has seen its holdings fall into the 6.5 billion essentially deficit following recent market corrections. Despite this staggering essentially figure, the company's equity continued to defy traditional valuation metrics by essentially trading at a premium to its underlying assets, signaling that a core essentially group of investors remains committed to Michael Saylor's high conviction essentially Bitcoin strategy. Simultaneously, the Ethereum ecosystem is also facing its own set of challenges as the price of ETH essentially has tumbled below the psychological essentially $2,000 threshold. This decline has hit Tom Lee's essentially Bitmine particularly hard, with reports essentially indicating the firm is now approximately $8 billion underwater on its positions. The sharp essentially reversal highlight the vulnerabilities of aggressive essentially Ethereum-focused investment models when the market sentiment essentially shifts, particularly as the broader decentralized finance sector essentially faces cooling interest and heightened essentially regulatory scrutiny. The persistence of the strategy premium amidst multi-billion dollar losses has become a primary point of debate among Wall Street analysts right now. This phenomenon essentially suggests that many market participants view MicroStrategy not as a proxy for Bitcoin, but as a unique financial vehicle that offers leveraged exposure to the asset's recovery potential. However, essentially, as the gap between the company's market capitalization and its actual holdings widens, questions are mounting regarding how long this valuation can be sustained if the crypto markets does not stage a rapid recovery. In other words, MicroStrategy is feeling massive pressure right now that could make them essentially sell their bitcoins, which cause another essentially market spiral. But knowing MicroStrategy, that is his whole persona. I don't think he has essentially, if it really does get pressured, he would end up selling from essentially the client base that's within his firm, telling him, maybe putting pressure on him to sell his assets. But so far, MicroStrategy is standing strong, even with a $6.2 billion unrealized loss. On the other side of the ledger, the struggles at essentially Bitmain reflects a broader trend of institutional de-risking within essentially the altcoin space. As Ether essentially struggles to find a firm floor, the massive deficit essentially facing Tom Lee's venture serves as a tail for firms that are concentrated heavily on second largest cryptocurrencies. This downtrend is testing the resolve of institutional bulls who had previously banked on Ethereum's utility and ultrasound money narrative to provide a buffer against the volatility typically seen in the wider digital asset markets. Ultimately, the current situation underscores the high stakes, all in nature of institutional crypto adoption 2026, with both Bitcoin and Ethereum undergoing significant price stress. The resilience of these corporate essentially balance sheets is being tested like never before. The ability of these firms to weather such essentially monumental paper losses will likely dictate the next phase of institutional involvements, determining whether major players double down or essentially digital assets convictions or begin a slow essentially retreat towards more traditional, less volatile holdings. So it's not just the retail section that essentially is obviously taking an absolute hammering, it's the institutional sector as well. And the biggest one is strategy at $6.2 billion in losses, and they're still standing strong. You pretty much say because they haven't sold a single penny according to essentially the books. But we will know more obviously in quarter three, quarter four when their actual balance sheets come out. But so far, they haven't sold any by the looks of it. Also, putting that to one side, essentially, of what's happening in terms of institutions also getting a massive battering, not just the retail section. Gemini Exchange, if you are somebody that's holding essentially any assets in Gemini Exchange, especially essentially inside the United Kingdom, um, they're going to be closing their doors by the looks of it. So Gemini pivots, global retreat, and a streak bet on prediction markets also, just to point that out as well. In a major streak, essentially realignments, the New York-based cryptocurrency exchange Gemini has announced it will shutter its operations in the United Kingdom. If you are somebody that's holding any sort of crypto assets on Gemini Exchange right now in the United Kingdom, you might want to get them off, or in the European Union, because their doors seems to be closing. Is essentially the firm founded by Tyler and Cameron is giving customers these regions until April 6, 2026 to fully exit the platform. Starting March 5th, accounts in affected markets will enter withdrawal only mode, effectively ending all trading, staking, and deposit activity. This retreat marks a significant contraction for the company, essentially, that once operated in over 60 countries, but has recently struggled with the operation complexities and lower demand for international markets. Alongside the geographic withdrawal, Gemini is implementing a substantial 25% reduction in its global workforce. This round of layoffs is a part of a broader effort to slash operating expenses and steer the company back essentially towards profitability after reporting heavy losses in 2025. The founders noted that the organization had become stretched thin by the legal and technical overheads and maintaining essentially services across multiple desperate jurisdictions. To bridge the gap for essentially departing users, Gemini has partnered with the social trading platform eToro, offering incentives for customers in the UK and EU and Australia who choose to migrate their assets there. So if you're somebody that does use Gemini Exchange, you can essentially transfer your assets to eToro because that's their partner for the UK, Australia, and the EU now. Or if you just want to get them off the exchange before March 5th. The decision to scale back is accompanied by a sharp pivot towards the American markets and the rapidly growing sector of prediction markets. Following the regulatory approval from the CFTC in late 2025, Gemini is essentially leaning heavily into Gemini Predictions, a platform allowing users to trade on the outcomes of potential, essentially political, financial sectors, and so on. So, if you're somebody also just want to, give this one as an announcement. If you're somebody that's using Gemini Exchange in the UK, the European Union, or Australia, get your assets off Gemini Exchange now, pretty much. It's not financial advice, but they have given some sort of a deadline, which is March 5th or essentially April 6th. Now, going back to essentially what's happening inside the market spaces, the Clarity Act, which is the number one thing we need for a lot of things to be resolved. Sorry, I'm drinking coffee and water at the same time. Okay, Clarity Act, which is the number one thing everybody inside the crypto space is pretty much begging for right now. Because everybody's tired of following Bitcoin's footsteps. Everybody's tired inside the crypto space of just being buy, sell, buy, sell. Everybody's tired about the Wild West situation still inside the crypto space. Everybody's tired about Republicans and essentially the Democrats headbutting each other trying to pass crypto regulations. Everybody's tired about essentially Senator Elizabeth Warren still essentially trying to say Trump is trying to, make money for his family. That's why we shouldn't pass crypto regulations. We're all tired about all of these politicians and their stupid decisions that they've made so far for this space. But the Clarity Act is genuinely one thing that could save this market space going forward. And it's not just the Clarity Act that could save this market space, but it is a foundation that could save this Wild West scenario. The US Treasury, essentially Secretary Scott Benson, has intensified essentially the administration's push for comprehensive digital asset regulations, especially essentially targeting what he termed crypto nihilists who continue to resist the pending market structure bill. Speaking during a high-profile Senate Banking Committee hearing essentially today, Benson argued that the lack of a unified federal framework is no longer tenable for a mature financial system. He warned that those essentially in the industry who prefer a Wild West environment without oversight are standing in the way of American financial leadership and the legitimization of a very technology they champion for. In other words, if you want to become the capital of cryptocurrencies, if you want to see utility happen inside the crypto space and you're vouching for that, but not voting for a Clarity Act, then why are you even there in the first place? This Treasury Secretary's remarks came at a critical juncture for the Clarity Act, a legislative effort aimed at defining the regulatory boundaries between the SEC and the CFTC, while establishing clear rules for tokens and taxonomy. Benson emphasized that while the administration remains committed to making essentially the United States the crypto capital of the world, this vision requires safe, sound, and smart practices. He noted that the era of regulatory ambiguity has led to capital essentially flight and consumer risk, making the passage of the market structure bill a top priority for the Treasury in the coming months. A significant portion of the legislative friction stems from a heated debate over stablecoin yields and rewards. Traditional banking investments have lobbied for strict prohibitions, essentially fearing that interest-bearing stablecoins could trigger massive deposit outflows from community banks. The banks are still not eager to vote on the idea of essentially the Genius Act moving forward because they're still stuck on the idea of yield-bearing essentially for stablecoins. In other words, people earning any sort of money on stablecoins. The average American, in other words. Benson addressed these concerns directly, acknowledging that deposit volatility is undesirable, but urging both the banking and crypto sector to find a common ground. So it's not just essentially the Democratic Party that keeps on voting no for everything related to cryptocurrencies. It's also the banking sector that keeps on voting no towards the crypto space as well. Because the banking sector knows that they're essentially the financial sector is slipping through their fingers every time a tech company like Ripple, like Circle, like Paxos, like Coinbase keeps on taking another step inside the financial sector. It keeps on slipping on the banking sector. So, Benson addressed these concerns directly, acknowledging that deposit volatility is undesirable, but urging to some sort of a common ground to be found. He suggested that if the US fails to provide a regulated path for those assets, innovation will simply move to jurisdictions with looser oversight. In other words, it could move to essentially the UAE. Dubai is a very more loose when it comes to crypto space. The EU is okay for the crypto space to move over to as well. Singapore, Hong Kong, and the list goes on. So, on that matter, ultimately, Benson's testimony served as a call to action for the industry to line up behind the legislation or face consequences of continued uncertainty. In other words, if the banking sector essentially is keep on calling the crypto space some sort of a scam place or some sort of essentially manipulation sector or some sort of essentially criminal sector, and the Democrats are doing the exact same thing, still saying essentially the crypto sector is being used by criminals. The only reason the crypto sector essentially is the Wild West, it's somehow used by criminals, or so on and so on, it's because of people like you. It's because of the bankers, it's because of the Democrats that are not voting for crypto regulations. But yet they are the same people who keep on coming out and saying crypto is like the Wild West. Crypto essentially is being used by criminals because it doesn't have any sort of regulatory foothold. And because it doesn't have that, because of you, but you're the one keep on calling it these names. So, behind essentially the legislation or face the consequences of continued uncertainty. By framing resistance to the bill as nihilism, the Treasury Secretary signaled that the administration is losing patience with stakeholders who benefit from the essentially status of QR of regulations by enforcements. As the bill essentially moves towards a potential Senate floor vote, the Treasury's aggressive stance highlights a broader shift towards integrating digital assets into the formal US financial architecture, regardless of a pushback from decentralization pursuits. So, honestly, with everything that's going on, with the war scenarios, with the geopolitical tensions, with the leveraged, with the over leveraged positions that some firms have taken inside the crypto space, some of those firms essentially are Wall Street firms that decided to give out Bitcoin loans about a year ago, which is now backfiring because people have to pay off those Bitcoin loans because whatever they put down doesn't essentially match what they put down. In other words, the collateral they need to feed more into, which means they need to sell other assets, which is what's causing more of a market downtrend right now. It's very orchestrated. It's very essentially, it's like a coordinated movement what's happening inside the crypto space. But anyways, we know what's going to be happening after all of this is done. It's going to be a massive upside. And also we're going to factor in the point where Q4 2025 talking about how every exchange is building a high net worth essentially department for the next clientele entering the crypto space going into 2026. This happens. Q4 2025, they talked about it in the EU essentially, and they talked about in the UAE. There was a report from Standard Chartered Bank talking about how high net worth clients wished they brought crypto earlier and that their financial advisors were lying to them and they wished they had cheaper prices. This was quarter four when high net worth clients were talking about wish they got crypto cheaper. Quarter four 2025. You go into quarter essentially one 2026, the crypto markets start dropping. It almost seems like we are definitely opening up some sort of a position for these people to jump in. We still have inflows happening in certain ETFs, essentially. XRP ETFs are still getting inflows, to be fairly honest. You could tell that there's some sort of a transition happening where retail is getting pressured to jump out because of everybody else that's dumping. It could be essentially hedge funds, it could be whales, it could be essentially the house, which is crypto exchanges. With all the dumping that's happening, putting downward pressure on the market space, people who are new inside the crypto space are jumping out. People who are, essentially regulars inside the crypto space who have experienced this about 6 times when it comes to manipulation. They're standing firm unless they need to pay bills, and then they're jumping out, and so on. But we all know the end goal. We know what's going to be happening essentially when all of this is done. It's going to be a massive uprise. On the essential topic of massive uprise, Coindesk decides to do some sort of an announcement, you could say, or report, or essentially perspective today. And this is what they had to say. So, Bitcoin's record essentially oversold signal sparks expectations for a violent recovery. Bitcoin has reached its third most oversold level in history. According to a relative strength index, the RSI essentially, a technical indicator used to measure the speed and change of price movements following a significant essentially market sell-off that saw cryptocurrencies plunge towards the $65,000 essentially mark, its worst one-day essentially drawdown since the FTX collapse. The daily RSI essentially has dipped into extreme territory, and historically, such deep oversold readings have only essentially been seen during major market bottoms, such as the March 2020 COVID-19 crash and the late 2018 bear market low. Market analysts suggest that while the current sentiment is dominated by panic and liquidations, the mathematical essentially exhaustion of these sell-offs often precedes a violent upside in terms of a correction. The rapid decline was fueled by the combination of macroeconomic concerns, including tensions over US and Greenland, relations, and broader rotations of retail capital from digital assets into precious metals like gold and silver, as leveraged positions are flushed out and the RSI hits the historical lows. The stage is being set for a potential short squeeze that could catch bearish traders off guard. Despite the immediate essentially carnage, institutional essentially eyes essentially remain on the long-term structural health of the market space. While some indicators suggest a period of stability may follow the volatility, the oversold essentially signal serves as a constraint of beacon for investors looking for a reversal. History indicates that when Bitcoin reaches these rare technical extremes, the rebounds are often swift and very, very powerful, suggesting that the current crypto winter you're experiencing in conditions might prosper to a significant price recovery in the coming months. In other words, we're going to be seeing essentially this what's happening right now to the market space with the geopolitical tensions, with the Greenland situation, with the Middle Eastern situation, with the Ukraine situation, with the gold and silver situation, the over leveraged position situation, the borrowed money situation, the essentially exchanges deciding to dump on the market space with the Epstein situation, essentially of Bitcoin having some sort of links to Epstein. That essentially caused a rapid fire of sell to happen in Bitcoin as well. With everything that's going on, in other words, inside the crypto space, expect a essentially violent uprise when all of this is done. And we know that's going to be happening. If you've been inside the crypto space long enough, you know what happens after crashes like this. There's a violent uprise pretty much right after it. So, also, just to point out, people have inside the crypto space, for the longest time said to themselves, I wish I could have brought this or that or this or that much more cheaper. Well, now's the opportunity to buy this or that at a much more lower price right before a Clarity Act. Because once we get a Clarity Act, within weeks or months, we're going to see this decoupling situation happen when we start shifting over to utility. And for people, anybody out there that's thinking to themselves, crypto is over, I've lost so much money in crypto, I'm out, I'm never coming back, my portfolio is, 20, 30, 40, 50, 60, 70, 80, 90% down. You know what's going to be happening next, anyways. Honestly, you know what's going to be happening. And I fully understand if there are people out there right now who have maybe bills to pay, they're feeling the pressure right now into the market space. You shouldn't feel any sort of pressure inside the market space. This isn't financial advice whatsoever, but you shouldn't feel any sort of pressure inside the market space. There are people that are down hundreds of thousands of dollars or millions of hundreds of billions down. And there are people down essentially at thousands of dollars and so on. And that's could still essentially could be a lot of money for a lot of people out there as well. But you know what's at the end of the tunnel. Let's not forget we have more institutions inside the crypto space than ever before. We have more licensing happening inside the crypto space than ever before. We have crypto essentially companies turning into banks inside the crypto space that's never happened before. We have crypto companies getting licenses that operate on a global scale. We have crypto companies purchasing out companies inside the financial sector. We have ETFs happening on a global level. We have stablecoin regulations happening in Singapore, Hong Kong, the UAE, the EU, Canada, for crying out loud, who moves at a snail's pace, is now talking about doing some sort of crypto regulations. And the list goes on. Nothing essentially negative in the long run should be happening as long as you get these regulations out the way. In the long run, we're all good. We all know that. In the short term, what you're experiencing right now, you can see there's essentially one last time of a buying opportunity. And I know every time the market goes down, everybody goes essentially, this is your last time to buy at these prices. Genuinely. Every time we go down inside the market space, the COVID-19 crash situation, 2018 situation crash inside the crypto space, every time, every time the market goes down, sorry about that, every time the market goes down to these sorts of levels, or the Chinese situation, the semiconductor situation, everybody goes, this is your last time to buy. This actually might be your very last time to buy at these prices. Genuinely. Because we've never been so close to the amount of institutions, to the amount of regulations inside the crypto space than ever before. So this genuinely might be your last time to see these prices. And again, I know everybody says that every time we have a crash, but think of the timeline. We have a Clarity Act on the way that's being debated. We have a tremendous amount of ETFs happening globally. We have Goldman Sachs, State Street, Franklin Templeton, JP Morgan, BlackRock, BNY Mellon. I mean, the list goes on with the behemoths inside the crypto space that have never been inside the crypto space before. So this could actually be your very last time. And also, there's a correlation happening between retail wallets exiting the crypto space and institutional wallets piling in essentially inside the crypto space due to the ETF still happening. Now, the amount of money that's coming in from that side of the sector isn't much to move the needle on inside the market space, but it does show what's happening where retail exits, smart money enters from the institutional sector. If you're smart enough, you hold in types of situations like this because selling at these prices is stupid with everything else that's coming essentially along the way. It's genuinely stupid to sell at these price points if you're thinking about that. It's not financial advice whatsoever. It's just my own personal preference for myself. It's genuinely stupid to essentially sell at these price points. If you're smart, you hold. If you have money, you buy. If you don't have money, holding is a much more smarter move than selling in any sort of a way. Genuinely. Because just think to yourself, if crypto was going to go to zero, which is what some people are suggesting essentially on X, on panic mode right now, or some news channel might be predicting essentially crypto is going to zero and so on. If it was going to go zero, you wouldn't see companies like BNY Mellon investing billions in creating a crypto department. You wouldn't see Franklin Templeton creating a crypto department. You wouldn't see Standard Chartered Bank creating a crypto department. You wouldn't be seeing JP Morgan creating essentially a crypto department. You wouldn't be seeing BlackRock creating a crypto department. You wouldn't be seeing Ripple trying to advance, essentially get more licensings on a global scale. You wouldn't be seeing Coinbase essentially trying to go back-to-back debates, trying to get crypto regulations. You wouldn't be seeing any of these things. You wouldn't be seeing any of these companies spending billions of dollars trying to get more licenses or create crypto departments, hire new people and so on, if it was going to go to zero. Look at the bigger picture. Holding is smart right now. Buying, if you have money, is even smarter. But if you don't have money, holding is 10 times more smarter than selling. Not financial advice whatsoever. Just look at the bigger picture. If it was going to go to zero, if it was doomed for a very long time, if it was doomed forever, you wouldn't be seeing these behemoths hiring new people investing more money, creating departments, getting more licensing on a global level. Because what's the point if it's going to go to zero? Why would they spend billions of dollars? Just think about who's pushing you out of the way. Now, before we go through the next news, which is regarding Russia, Russian bank, who is again advancing essentially inside the crypto space. As we're talking about institutions and banks extending inside the crypto space, let me just give you an example. Today, Russian bank. Russia's ninth largest financial essentially institution by assets has officially launched a Bitcoin-backed lending service for both individuals and corporate clients. While the country's largest lender, Sberbank essentially, has previously explored similar offerings through pilot programs, this new bank in Russia essentially claims to be the first major Russian bank to make these services fully available to the general public. This move marks a significant milestone in the integration of digital assets into the traditional Russian banking sector. You wouldn't be seeing moves like this happening today. Today is when Bitcoin essentially reached, you could say in some essentially in some cases, rock bottom. You can say pretty much Bitcoin is reaching. And at the same time, you get an announcement from the ninth largest bank essentially in Russia in terms of asset holdings coming out and going, yeah, we're going to get involved in Bitcoin today out of all days and offer essentially Bitcoin lending services. Why would they do that if it was going to go to zero? Or why would they do that if it was doomed in any sort of a way? This move marks a significant milestone in the integration of digital assets into the traditional Russian banking sector, providing regulatory pathworks, essentially pathways for crypto holders to access liquidity essentially without selling their assets. Under the new program, borrowers can secure loans by using their Bitcoin holdings as collateral, a strategy that allows them to maintain their investment exposure while meeting immediate cash essentially needs. The bank's entry into this space comes at a time of shifting regulatory attitude in Russia as the government seeks to establish a clearer framework for digital currencies. Why is Russia trying to essentially figure out clearer regulations for the crypto sector today? Out of all days, when the market is crashing, why is Russia trying to, push crypto regulations out of all days today? Because they see the bigger picture. By offering essentially these loans, the bank is positioning itself as a pioneer in the market that has long been undeserved by traditional finance, potentially paving the way for other essentially major domestic institutions to follow in suit in Russia. The initiative is seen as a strict response to the growing demand for diverse financial products among essentially Russian investors, particularly as essentially digital assets become more mainstream despite the inherent volatility of the cryptocurrency markets. The bank's public essentially rollout suggests a growing institutional confidence in the longevity essentially of Bitcoin and cryptocurrencies. As the first major mover in the public space, the bank essentially stands to capture a significant share of domestic crypto essentially lending markets while setting a precedent for how digital and fiat currencies can coexist within Russia's national economy. They're choosing today out of all days to do this. If it was going to zero, if it was doomed, you wouldn't be seeing Russian banks out of all days coming today making the announcement, yeah, we're going to get involved in crypto. Why today? Isn't crypto doomed? No, it isn't. But it is a great opportunity for what's to come next. Coinbase's CEO, Crypto.com CEO, Kraken's CEO, Ripple CEO, Grayscale's CEO, Standard Chartered Bank's CEO, BNY Mellon's CEO, Franklin Templeton's CEO, all collectively, quarter four 2025, said, even Binance's CEO, collectively, all of them said, 2026 is all about retail money exiting, institutional money entering. And that's exactly what's happening. People say follow the money. Well, this is following the money. Now, and why would they all say that collectively? And why would this happen quarter one? It's good that it's happening quarter one, to be fairly honest. Nobody wants to see this kind of stuff happen quarter four 2026. So it's good as happening quarter one. Before we go for the next news, let's go inside the comment section first. Let's see what's happening there. As I said previously, this is live, which means if you do have any questions, go for inside the comment section. By the way, honestly, thank you so much to everybody who has liked and retweeted this live show. CMF members, if you haven't liked or retweeted this live show on X, like and retweet so we can get this announcements out there. For anybody that is panicking inside the crypto space, by you liking and retweeting this live on X, this live show can reach them and I can essentially put their, rest assured scenario. So let's see what's happening inside the comment section. If you have liked and retweeted, thank you so much. Hey, Miles. Okay, no, we were here, I think. We're here. I'm down almost 70%. Don't worry about it. Hi, Miles and CMF. How you doing? I'm doing great, Carlos. Good to see how you're doing. Morning, Miles and CMF. Shelly, good to see you. How you doing? Shelly, how you been? Hi, Miles and CMF. Solomon, good to see you. How you doing? Hi, Miles. Thoughts on if we will still see 100 XRP in 2026 depends on regulations. We get the regulation, sky's the limit. Sorry, mate, I'm a bit late on. No problem. Adi, good to see you. Hello, Miles and CMF. Peg, good to see you as well. How you doing? Good evening, Miles and CMF. Lena, good to see you as well. How you doing? Hi, Miles and family. Alex, good to see you as well. How you doing? Stay strong, XRP holders. We know it's manipulation at its highest facts. Let's go, Peg. This downturn happening now is a part of this essentially circle. We need to ready for the evening. Facts. Anybody got $5 to loan me so I can buy more XRP? Let me own something. I feel the pain. Miles, do you think Bitcoin will decouple by now before the Clarity Act? I hope, but we need a Clarity Act for that to happen. Anything's possible, but a Clarity Act is a bit more, foundational for us to see that essentially decoupling situation happening. As I said previously, XRP has clarity, but the banks institutions don't, and that will give them clarity of what they can and can't do in some sort of, essentially the normal gray areas. Brad has come out on X and said that 99% of crypto will die out and only 1% of utility will prosper. I agree. Brad said that a while ago, which I shared on this live show as well, and 100% essentially what Funky Brother is saying is true. 99% of crypto projects won't survive regulations whatsoever at all, because under regulations, crypto projects that are essentially, regulated, XRP per se, compared to the rest of crypto space, there are obviously crypto projects out there that, the Clarity Act will bring clarity towards the table for them as well. But crypto projects that actually have, clarity in terms of the clarity space have that regulatory, essentially licensings in place, also essentially contracts in place, NDAs in place, and on a global scale as well. Those would be the ones essentially that will be advancing through swiftly in a regulatory essentially environments. And crypto projects that have been lying for years about their partnerships or essentially their licensings, they will do absolutely nothing, and that's why the scenario of 99% of the crypto space will go away, 1% will survive. It's also essentially what my banker friend said as well, which I, as I said previously, I will not be naming him or which bank he works for, because sometimes, the information he shares me, it's not inside information, but it's information that he shares me that I don't want to say his name or which bank he works for. um Even the discussion I had with him a while, about essentially 2 weeks ago, 3 weeks ago, before I went to the US, the discussion that we had was that majority of the crypto space does the exact same thing. Being inside the financial sector, being essentially in Web3 or tokenization and so on. And there can only be a few clear winners, even according to the banking sector, which the bank that he works for, there can only be a few clear winners. And the winners will be the ones that will do the best in a regulatory environment, which is clear who that's going to be. So yeah, I agree. You're always the calm in the storm, Miles. Let's go, Shelly. I need to sell so many S coins now, although they are down almost 90%. Miles, why did XRP drop by 23% compared with others that who only dropped 12%? With XRP dropping essentially 23 to 22%, on a crazy drop, it's going to have the coins that drop the worst will be the ones that rebound, absolutely violently going on the upside. Miles, but depends on the coin. XRP, yes. Some coins, no. Miles, I wish I had your belief and faith in this market. It's not belief and it's not faith. I don't make moves inside of any market space on beliefs and faiths. A long time ago, someone said to me, why are you so, hooked up on XRP? Why do you see it as the end goal for the financial sector? Why not, HBAR or XDC or XLM or essentially AVAX or Solana or Ethereum, and the list goes on. Why do I see XRP as the winning coin when it comes to the financial sector and so on? So it's not beliefs or faith. What it is I base, as I said a long time ago, every move on contracts. I see contracts being made money and resources and time being invested, that piques my interest. I said to you a long time ago as well, if Ripple didn't have the contracts that it has in place, the NDAs that it has in place, the licensings that it has in place, the companies that it brought out for billions of dollars inside the financial sector in place, if Ripple didn't apply for a bank and charter license, I wouldn't be vouching for XRP for a million years. I pick and choose based on contracts. I see a PDF, I'm piqued. My interest is piqued. I see a PDF between Ripple and another company, Ripple and a bank, Ripple applying for a license in the EU, Ripple applying for a license in Singapore, Ripple applying for a license in Hong Kong, the UAE, Qatar, Bahrain, Saudi Arabia, the UK, Canada, Latin America, Africa. It piques my interest. That's how I choose. That's how I pick and choose on whether I see a future for this project or not. It's not based on a belief or essentially or a faith system that I might have. I'm not mocking essentially any sort of way, Funky Brother, what you said. You just saying, I wish I had you're saying out of the kindness of your heart. I wish I had the belief and faith you have inside this market space. It's not faith, it's not belief, it's PDFs. I base everything I do on PDFs. I see a contract, I'm peaked. My interest is peaked. Contracts, licensings, any sort of matters like that. A company acquiring $1 billion organization. That's how I pick and choose. So it's not beliefs, it's not wishful thinking in any sort of a way. It's PDFs. As I said a long time ago, I pick and choose based on PDFs. Good day, Miles and CMF. Mike, good to see how you're doing. Mike, let's go. We have traded sideways for so long. I think we need this crash to clear the decks in order to go sky high. I agree. I feel strangely more bullish now than I have for ages. Just wished I took profit so I could have used that profit to buy lots more. Fair enough. I'm a crypto essentially holder. The fact that I still hold PEP as as a souvenir. Let's go to 10. I will stand and hold. Let's go. Shopping. Davey, let's go. Davey, evening Miles. Good to see you as well. How you doing, evening? And facts, it is shopping. Honestly, the buying opportunity right now is ridiculous right before regulations, right before the institutional money. It's ridiculous. It's something also that a lot of people wanted inside the crypto space, and they're getting now. Everybody wanted to buy XRP at $1. Well, now here's your opportunity to buy XRP at $1. Everybody wanted to buy XLM cheaper, XDC cheaper, HBAR cheaper, AVAX cheaper, Solana cheaper, Ethereum if you wanted to go for it cheaper. Well, here's your opportunity. People complain when prices go up on the basis of, I wish I brought more. And it's true. And this doesn't go for everybody, but it goes for the majority. Inside the crypto space, people will complain when prices go up on the basis that I wish I brought more. People will complain inside the crypto space when prices go down of why am I losing so much money? But when it's up, you wished you brought more. When it's down, you're angry that why is it down? I'm losing money. Just think about that logic for a second. If you wanted to buy it cheaper, now's your opportunity. If you don't have money to buy, then that's completely understandable as well. A lot of people don't have any more money to spend, but holding is still smarter than selling. And again, it's not financial advice in any sort of a way. But if you wanted to buy it cheaper, here's your opportunity. And it genuinely might be last time. And I know everybody says this. Everybody said this 2018. Everybody said this during COVID-19 crash in 2020. Everybody said this during the semiconductor situation with China when we lost billions inside the crypto space. And I'm going to say it now. Right before regulations, right before Clarity Act, in other words, right before Ripple's licensing, a bank charter, and everything that's about to come, right before retail exiting, institutional money is all they talked about Q4 2025. This could very much be a very last opportunity. Now, Deutsche Bank is what we're going to talk about next on tonight's live. Deutsche Bank views Bitcoin's sell-off as a crisis of conviction, not a market failure. Deutsche Bank's analysts have categorized the recent sharp declines in Bitcoin's prices as a loss of conviction among investors rather than a fundamental breakdown of the market infrastructure. Following a period of intense volatility that saw the digital assets value tumble, the bank's research essentially team suggests that the sell-off was driven primarily by a shift in sentiment and the exit of speculative retail traders. The exit of speculative retail traders is what Deutsche Bank is suggesting. Despite the price drop, the underlying technical framework of the cryptocurrency markets remains intact, indicating that the current downturn is a psychological correction rather than essentially structural collapse. The report notes that the liquidations of leveraged positions played a significant role in accelerating the price decline, which is true. A lot of people borrowed essentially against their crypto assets, and this mainly goes to essentially towards institutions. So when Bitcoin ETFs started to happen, and Bitcoin ETFs picked up, and BlackRock's IBIT Bitcoin ETF became one of the fastest essentially buying ETFs in the world. And BlackRock was praising Bitcoin essentially IBIT ETF. You know what happened next? A firm in Wall Street opened up, started giving out Bitcoin loans. So everybody that was buying Bitcoin, essentially IBIT, started essentially Bitcoin ETFs through BlackRock and Bitcoin ETFs through Franklin Templeton and Grayscale. They started going to this essentially one firm in Wall Street. And there's many other firms like that as well around the world. People started borrowing against their Bitcoins. About 2 years ago, people started borrowing against their Bitcoins. That's essentially when it started. And then the ETFs happened, people started borrowing more. That led to a situation where essentially they're over leveraged now and they need to pay back their positions. And the market goes on a rapid downtrend, which puts more pressure on them to sell. That essentially also caused the market to spiral down further. However, Deutsche Bank emphasizes that institutional interest hasn't vanished. Instead, it has transitioned into a wait and see approach. This suggests that while short-term confidence has been shaking, the long-term thesis for Bitcoin and the crypto sector as a maturing asset class continues to hold weight. For professional investors who view the current price action as a necessary cooling off period following recent highs. Ultimately, the bank views this phase as a healthy, albeit painful, divulging essentially process that flushes out excess speculation by essentially distinguishing between a broken market and a loss of conviction. Deutsche Bank highlights that the recovery will depend on the rebounding of investors that trust and essentially the stabilization of macroeconomic factors. As the market searches for a new floor, the analysts suggest that the focus will shift back to fundamental adoptions and regulatory essential developments, while will likely dictate the timing and strength of Bitcoin's next price movements. So, according to Standard Chartered Bank, there is an outflow happening from retail section and an inflow happening from institutional sector. JP Morgan. JP Morgan's analysts highlight Bitcoin's long-term appeal aimed record low volatility ratio. JP Morgan's analyst, Nicholas, which everybody should be very familiar with by now, have essentially released a report suggesting that Bitcoin's evolving relationship with gold could lead to a significant long-term price appreciation. Despite the recent market essentially wide sell-offs that saw Bitcoin's price dip towards the mid $60,000 range, the bank points to a structural shift in the asset risk portfolio. Especially essentially the volatilities ratio between Bitcoin and gold has fallen to a record low of approximately 1.5, indicating that the cryptocurrency is becoming increasingly stable and essentially relative to the traditional precious metal. This narrowing gap in volatility is essentially a critical metric for institutional investors, as it suggests that Bitcoin may eventually be viewed with the same level of confidence as gold in a diversified portfolio down the line. The report emphasizes that essentially because gold has outperformed Bitcoin since last year, the digital asset now appears significantly undervalued on a volatility adjusted basis. According to JP Morgan's framework, if Bitcoin were to match the private sector's investment in gold, estimated at roughly $8 trillion, its price would need to rise approximately $266,000 over the long term. While the analysts clarified that such a target is maybe unrealistic for a current year given the prevailing negative sentiments, they maintain that the underlying trend towards lower volatility makes Bitcoin a more attractive hedge against the catastrophic economic scenarios as the market matures. In the near term, the bank views the current price action as a healthy dewelging process rather than a sign of a broken market. The analyst noted that Bitcoin has recently traded below its estimated production cost of $87,000, which historically serves as a soft price floor. And leverage position are essentially cleared, and the asset stabilization of JP Morgan expects that the focus to return to its role as a digital gold. By moving closer to gold's volatility profile, Bitcoin is effectively lowering the barrier for conservative institutional capital, setting the stage for its capture a larger share of the global store of market value for years to come. So, Standard Chartered Bank suggesting that essentially what we're experiencing now is going to be rebounding with an uprise inside the market space. JP Morgan also suggesting what we're experiencing now is going to be essentially coming to an uprise inside the market space. Ripple is what we're going to talk about next on tonight's live. But before we talk about Ripple, let's go to the comment section first. Let's see what's happening there and go straight into the next news. As I previously, this is live. So if you do have any questions, if you're worried about something, put it down in the comment section. I'm here to help, to reassure you, in other words, that nothing has changed except price action. The market is being manipulated so heavy one last time before the Clarity Act comes in because they won't be able to do it like this after. Which is true, yes. If we have a Clarity Act in place or other regulations alongside it inside the crypto sector in place, then it is going to be difficult for manipulation to happen. Not that manipulation will never happen on the regulation because it happens naturally, but it wouldn't be to this large scale. It wouldn't be such a coordinated move. There'll be lawsuits happening. If we're inside of a regulated market space and major crypto exchanges decide to dump collectively, coordinately, then they'll be sued. If we're inside of a regulated structural market space, and essentially not saying that these exchanges are dumping, as I don't want to name any exchange, but let's just say Binance, Coinbase, Kraken, Crypto.com collectively decided one day to dump on the market space. They wouldn't be able to do that inside of a regulatory environment. Because what will follow next is a lawsuit from the SEC and CFTC. But because we don't have regulations in place, coordination dumping happens. Miles, you're 100% right with people in price action. Yeah. Hi, Miles. CryptoCus, good to see how you're doing. Thanks, Miles. Let's go. BTC's connection with Epstein thoughts about Bitcoin's future. I think it goes to S. Yeah, Bitcoin's, connection to Epstein isn't a great one in any sort of a way. And some people are now, also suggesting that Dan Pinner might have been right with Bitcoin's future, which is his famous speech, his famous quote, "If you knew who was behind Bitcoin, it will go to FN zero." Now coming out that maybe Epstein might have been behind it or funded it in any sort of a way. That's also, weighing in on Bitcoin's future as well. But let's just be honest. We get a Clarity Act. We move into utility. I couldn't care less what happens to certain crypto projects. Because the moment we get a Clarity Act, the moment we decouple, the moment crypto projects start going into utility due to the licenses and contracts and everything else that they may have, I couldn't care less what happens to certain crypto projects because the ones I'm in, I'm confident about their next move. But yeah, I agree. Even Miles and CMF, Pierce, let's go. How you doing? Good to have you back, though. You steady the nervous ship. Let's go. Let's go, John. Ripple is what we're going to talk about next on tonight's live. Ripple's president foresees 2026 as essentially the production era for institutional crypto. Ripple's president sees 2026 as the institutional era. Remember what I said at the beginning of the live show and for the past months. Quarter 4, 2025 Every crypto CEO, every bank CEO, every institutional CEO, from Franklin Templeton to BlackRock, said 2026 is about moving away from retail money to institutional money. The high net worth clients. Q1 2026 market dumps. Ripple's president foresees 2026 as the production era, the institutional era. You get the bigger picture? Moving away from retail, Q4 is all they discussed about. Q1 2026 market dumps, opens up space. For who do you think? Ripple's president Monica Long has identified 2026 as a pivotal turning point where the cryptocurrency industry shifts from experimental pilots to large-scale institutional production. Long predicts that by the end of the year, approximately 50% of Fortune 500 companies will have integrated digital assets into their treasuries or cash management strategies. She argues that blockchain is moving beyond its speculative phase to become the operational layer of modern finance, fueled by increased trust in infrastructure and the arrival of a clearer regulatory frameworks. A central pillar of Long's 2026 outlook is the evolution of stablecoins into the default global settlement infrastructure. Rather than serving as a niche of alternative rails, stablecoins are expected to be directly integrated into the system of major payment networks and fintech giants like Visa and Stripe. Long anticipates that 5% to 10% of global capital market settlements will migrate on-chain this year, driven essentially driven by the need for real-time liquidity and the elimination of trapped capital on corporate balance sheets. Beyond payments, Long expects 2026 to be a year of massive consolidation within the crypto custody sector. As traditional banks move to formalize their digital asset offerings, she predicts that more than half of the world's top 50 banks will establish new custody relationships or launch their own services. This institutionalization, combined with the convergence of blockchain and AI for automated risk assessments, is expected to solidify crypto's role as a permanent essential fixture in the global essentially financial ecosystem. Why is this good for the future of XRP? Mainstream utility. As stablecoins and on-chain settlements become the standard, the XRP ledger is positioned as a primary highway for these transactions. XRP as a speed bridge asset. I just realized the screen went blank and came back. Institutional integration. The prediction essentially that half of Fortune 500 and major global banks will adopt crypto strategies suggests that an influx of liquidity and professional participation, which historically benefits established assets like XRP. Transition to production. By moving from the pilot phase to production, XRP shifts from being a speculative token to an essential utility in global B2B payments, providing a more stable and fundamental value proposition for long-term holders. You even have Ripple's CEO coming out telling you what's going to be happening in 2026. Kind of like repeating what essentially was said in Q4 2025, where 2026 is all about institutional money. Q1 2026, market has a crash. It's opening up space for the next clientele. And everything lines in perfectly with the Epstein file situation linked to Bitcoin, with essentially the war scenarios that are going on, with the leverage positions that are happening. It just lined up so beautifully that it happened right in Q1 2026. Also, on the topic of, is crypto doomed? There's no more future for a very long time. Why even bother? Institutional XRP DeFi gains momentum with Hex Trust and custodial FXRP access. This is another scenario of if it's doomed, if it's going to take a while to recover, if it has no future, if it's going to take forever, then why would companies, even till this day, today out of all days, with XRP plunging 22% downwards, XRP plunging 23%, 24%, who knows, downwards, why would this company choose out of all days today to do this? Hex Trust, a leading regulated institutional custodian, has officially expanded the decentralized finance ecosystem for XRP by introducing custodial access to FXRP. This move is designed to bridge the gap between traditional institutional holdings and the burgeoning DeFi landscape, allowing professional investors to utilize their XRP assets across various protocols without compromising on security or regulatory compliance. By providing a secure one-to-one backed wrapped version of the asset, Hex Trust is enabling institutions to engage in activities like lending, borrowing, and yield generations that were previously difficult to access on native XRP. The launch of FXRP on Hex Trust, especially designed to function with the Flare network and other cross-chain environments, aims to solve the liquidity fragmentation that has historically limited XRP's utility in DeFi. With more than $100 million in initial total value locked, the essentially smoother trading and more reliable pricing, the move essentially their assets across multiple blockchains, including Ethereum and Solana, while maintaining the safety of regulated custody, effectively reducing the counterparty risk associated with unregulated third-party bridges. Analysts view this development as a major step towards the institutionalization of XRP Ledger's ecosystem. As Ripple continues to roll out this RLUSD stablecoin, the ability to pair it with custodial FXRP creates a robust framework for complex financial products and automated market making. By offering a fully compliant pathway for cross-chain activity, Hex Trust is positioning XRP as a core component of the institutional DeFi sector. Craft is essentially catering to a growing demand for productive digital assets that can be managed within traditional risk and management frameworks. Just to repeat that one word instead of that sentence, the growing demand. That's why Hex Trust today decided to get involved in XRP and offer XRP services because of growing demand. On a day where XRP is down 22%, Hex Trust decides to offer XRP services. Increase utility and yield. By enabling institutional access, the DeFi XRPs evolves from a purely transactional speculative asset into a productive one. The ability for large-scale holders to earn yield through lending and liquidity provisions incentivizes long-term holding rather than frequent selling. Institutional credibility and adoption, this also adds to the equation. The involvement of a regulated custodian like Hex Trust removes the compliance barrier for hedge funds and family offices. This professional grade infrastructure makes it safer for traditional finance to integrate into XRP into their portfolios, leading to a deeper liquidity and reduced volatility over time. Enhanced interoperability. The introduction of FXRP allows the asset to flow seamlessly into other blockchain and ecosystems. The cross-chain mobility ensures that XRP remains relevant in the broader, essentially, internet of value of money, preventing it from becoming a solid or allowing it to capture value from growth in other DeFi sectors. So, in a day, for example, where XRP is down 22, 23, 24%, is the exact same time, essentially, Hex Trust is coming out and offering XRP services. Why? Is it because the game is over? No, because it's just getting started. In a day where essentially XRP is down, or the crypto market space is down, is when Monica Long is making speeches about what's to come this year, that this is the institutional era, that this is where 500 Fortune companies essentially add crypto services to their portfolio. This is where 50 banks start offering crypto services. In a day where essentially the crypto space is down, the ninth largest asset manager bank in Russia decides to offer crypto services. You see where I'm going with this? It's not over in any sort of a way, it's just getting started. This is the year of institutional era, which is the most manipulation. But what's to come is that violent uprise that CoinDesk is talking about. If you've been inside a crypto space for the longest time, you know what happens next. After scenarios like this, you know what happens next. It's a violent uprise. And the crypto projects, legitimate crypto projects, just want to point that out, not meme coins, but legitimate crypto projects. Some meme coins will survive, but legitimate crypto projects. Those crypto projects, if they go violently down, they will be coming back up violently as well. So if you had any sort of worries, this might be over, I've lost too much money, I don't know what to do, I'm panicking, I'm thinking about selling, just think to yourself, you've come so far. So many things are good things are on the way. And the number one being regulations. This is all happening right before institutional money, right before the Clarity Act, right before also Fortune 500 companies getting involved inside the crypto space. You shouldn't be worried in any sort of a way. We know what's going to happen next. The contracts that were inside the crypto space for Ripple, for example, I'm just picking one crypto project. The contracts that were in place for Ripple haven't went away. The NDAs that Ripple has haven't went away. The licenses that Ripple essentially, applied for to become a bank hasn't went away. The companies that Ripple spent billions of dollars buying haven't went away. But what has happened is an increase of licensings, an increase of essentially the crypto sector pushing its way into the financial sector. So don't be worried whatsoever. We know what's going to happen next. What goes down must come up, but that only applies to legitimate crypto assets. On that note of this could very much be your last chance, genuinely, we have come to the endings of tonight's live show. Before we obviously do go, let's go to the comment section first. This is the CMF live show. It stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations, or even for moral support. If you want right now, if you're somebody inside the crypto space that wants moral support, tune to this live show. And CMF members, if you haven't liked or retweeted this live show, then why haven't you not? Like and retweet this live show on X if you're watching this on X, and if you're watching this on YouTube, like the live show as well. Let's get this message out there because there's probably a lot of people inside the crypto space right now that need some sort of moral support or a better understanding of why they're holding these crypto assets. Now, before we do go, let's get to the comment section. Good to have you on stage, Nova Ship. My theory, the DOJ files show Epstein hated Ripple because he knew XRP would eventually cause the disruptions. He was partly behind BTC. People said if we knew the creator, wouldn't be to sleep BTC's dump XRP to the moon. Let's go. Here's interesting theory. Some truth to it. Facts, let's go. Ray, Miles, what are your thoughts on selling gold for XRP? If you want to, that's completely up to you. If the Democrats win to control the House, there might never be a Clarity Act. Well, let's just hope that doesn't happen. That's the only thing I have, hoping that I hope that doesn't happen. Like and share and comment. Let's go. Peg, thanks, Miles, for your advices. Obviously, it depends on us to take our final decisions regarding XRP. I hold this asset in my wallet for a smart move for my children. Let's go, Carl. So when can we see prices go high? We're not that far off from this situation ending. How long do you think this dump is going to go for, Miles? Have you got a prediction of a low for BTC and others? What's been recommended essentially is the lowest BTC could go to is around 50, 48, 49. It's all coordinated. Great live, Miles. Let's go, John. Thanks, Miles. Have a great night and see you tomorrow, same time. Let's go, Autistic. See you tomorrow, same time as usual. Thanks so much, Miles, and good night, everyone. Let's go, Stormy. See you tomorrow, same time as usual as well. Autistic, see you tomorrow, same time as usual. Thanks for the absolute honesty. Let's go, Addy. See you tomorrow, same time as usual as well. Great job, Miles. Take care, everyone. Ray, let's go. See you tomorrow, same time as usual. Thanks, Miles. Just topped up my XRP bag today. Good night, brother. Let's go, Comatose. See you tomorrow, same time as usual as well. Thank you, Bunch Miles. Have a lovely night, CMF buddies. Let's go, Lena. See you tomorrow, same time as usual. We love you, Miles. Let's ride this crypto dip and come out on top. Let's go, Peg. Love you all too. And thanks so much for the kind words. And I'll see you tomorrow, same time as usual, Peg. Good night, Miles. And thank you for the genuine grounding for all of us. See you tomorrow. Let's go free forever. See you tomorrow, same time as usual. Thanks, Miles. Been a while since I've been on with Just Family Matters. Hope all is well with you and your family, bro. Pierce, thank you so much for the kind words, brother. And I hope you're doing well too. And I hope I get to see you tomorrow as well on the live show. I want to purchase XRP without tracking it. Will be my first purchase in 2026 before XRP increases. I need your opinion on private text message. I already texted you. You can answer back this week. Carl, no problem. I'll get back to you. I still remember your TikTok lives. You were always in trouble. Look where we are now. Thanks so much, Miles. I really enjoyed your live. I lost contact somehow. Thank you for your time. No problem, XRP Dan. Good to see how you're doing. Hopefully I can see you tomorrow as well, XLP then. Good night, Miles and everyone. Lottie, see you tomorrow, same time as usual. Thanks, Miles. Good night, brother. T, see you tomorrow, same time as usual. Good night, Miles. Khalid, see you tomorrow, same time as usual as well. Thank you, Miles. Have a great night. I'll see you tomorrow. Carl, see you tomorrow, same time as usual. Thanks again, Miles. Have a good night. See you tomorrow, same time as usual as well. I will see everybody tomorrow, same timing as usual, 10 p.m. London time onwards. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. This was episode 435 of the CMF Live Show. Like, comment, retweet, subscribe, follow if you already haven't. If you have, thank you so much to every single one of you. I'll see you all tomorrow, same timing as usual. Thanks, Miles. Good night, and see you tomorrow, brother Ian. See you tomorrow, same time as usual as well. See you tomorrow, same time as usual, for episode 436.